Hey, what's up guys? Most of you are very familiar with the original Bitcoin stock-to-flow model. Recently, Plan B slightly modified the model and came up with a new and even higher BTC price target. In this video, I will explain how this new model predicts 288,000 per Bitcoin, sometimes after Bitcoin halving. This video is brought to you by SteepOculus.com. SteepOculus is a cryptocurrency platform that analyzes main market indicators such as blockchain screener, GitHub analysis, community analysis, technical analysis, and fear and greed index to forecast potential cryptocurrency prices. Everything is clear and accessible. When you register, you will see a dashboard panel with recommendation of 7 cryptocurrencies, what to buy and sell. If you are interested, check the link in the description box below. Saifedean Ammous made a very good job explaining in his book, The Bitcoin Standard, why Bitcoin is a hard money. Mainly it's because of the stock-to-flow. Many cryptocurrency enthusiasts heard about stock-to-flow, but it is very important to understand why this makes sense. Why Bitcoin is sound money. There is no one to explain better than Ammous himself. Let's take a look.
I found it to be the best way of explaining why it is gold that is money. Some people think it is because it is scarce, but that's not entirely accurate because actually, there are other metals like platinum and palladium that are also pretty scarce, but they don't have a monetary role. They haven't been used as money, and they've not acquired a monetary role, and they don't look like they're likely to acquire a monetary role. And in fact, people tried to monetize platinum in Russia in the 1820s, and it failed, even though it's rare. And I think the reason why, the best way of understanding it, is because it's not about the rarity or the scarcity, it's the stock to flow, or effectively it's a ratio of the existing stockpile of all the production that is existing on the market right now that can be sold, the ratio of that to the production that comes out of the mines every year. Gold is the prime money in history because it is the one commodity whose existing stockpiles are much larger than the new supply that is being made every year from gold. That's ultimately what it comes down to. And that's because gold has been mined for thousands of years by people all over the world because it does not rust or decompose or ruin in any way. It just continues to accumulate. And so we continue to add up more and more gold. And so even as we continue to get much better at digging for gold, every one particular year is just 1 year's production compared to thousands of years of production. This year is also the most advanced of all the years, so generally it's not 1 out of 1,000, it's about 1 to 60. In other words, it's always around 1.5%. Every year gold's supply grows at 1.5% roughly. So the stock to flow is roughly around 60 to 1. And that's really why gold was money. And that's why platinum can't be money, because platinum, even though it's rare, the stockpiles of platinum that we have accumulated have only been accumulated over a couple of centuries, and a couple of centuries in which platinum has had very little use in industry compared to gold's demand as money and for industry. So therefore the entire production of platinum that we have is pretty small. And if somebody were to go and declare platinum as currency and start using it as money and start putting value in it, if 10% of the mining and capital that goes into gold would switch towards prioritizing the mining of platinum, then you're going to get a massive increase in the supply of platinum, and the price of platinum is going to come crashing down. Bitcoin finds another way of reaching a higher stock to flow than gold, and in a few years Bitcoin will overtake gold in its stock to flow. Right now the Bitcoin supply growth rate is about 4% or 25 to 1 stock to flow, but in a few years it'll drop or grow beyond gold's, and then eventually it reaches infinity. So I think this is ultimately what makes something a good money. In other words, the size of the liquidity on the market is large enough that whatever happens in the production of the new mines doesn't really affect the market much. That's what makes a good monetary medium. Gold was the best thing that we had, but with Bitcoin, it's going to be, I think, even better.
After Ammous introduced stock-to-flow, Plan B is actually the one who modeled a stock-to-flow in March 2019. The stock-to-flow hypothesis states that the scarcity of Bitcoin as measured by stock-to-flow directly driven by the market value of Bitcoin. Let's take a look how stock-to-flow model applies to Bitcoin price.
I started with the numbers. Of course, Bitcoin is a different animal than the things I normally model. So there's no cash flow like a company or a fixed income instrument or a derivative. It's a bit like gold. It's just there. How do you value it? In fact, the same problem is there for gold as well, because you could, of course, look at the cost of mining of gold or Bitcoin. I just went with the digital scarcity idea. Also, after reading Saifedean Ammous's book, The Bitcoin Standard, he has a whole chapter in there about stock to flow. And stock to flow is, of course, also known in the commodities world, gold, silver. So I used that as that stock to flow measure as a quantification of the scarcity, and then use that as an input in a valuation model. So maybe for the listeners who don't know, stock is the reserve, the amount of Bitcoin or the amount of gold that's above the ground, that is just there. And flow is the yearly production. And then you just divide the two. Bitcoin, you have 17 or almost 18 million Bitcoins right now, 750,000 per year are added. That number is rapidly declining, by the way. But if you divide those two, you get a stock-to-flow multiple of 27. And what I discovered was that the stock-to-flow number is correlated with the market value. So, for example, the stock-to-flow of gold is 55 or something, and the market value is about 10 trillion US dollars. If you put all those stock-to-flow numbers of all the commodities out there and put them on the line, you get this straight line. It's actually a power law with a super high R squared, super high correlation. It's just amazing. So there's actually two models out there. So there's the cross-asset model, where it all started with gold and silver and etc. But there's also the time series model, where if you plot the stock-to-flow time series of Bitcoin of the last 10 years against the market cap, you can also see the correlation there and measure the correlation. And it's also really high, like 95%.
Well, I know personally, whenever I read it, I was like, this is it. It's about time somebody has put what I felt was happening, but didn't know how to describe it, right? And I think a lot of people in the community had this intuition that what you were describing and what you were actually applying mathematics to was happening, but we just didn't know how to describe it. And so here you come into it and you start describing it. For people that are not familiar with R squared values, describe what this is, describe what it means whenever you model something, and then the actuals compared to what the projections were, what that means.
R squared is a statistical measure for goodness of fit of a model. So if a model fits really good to the data, like perfect fit, it has a high value, 100%. And if there's no fit at all, it's 0. If you look at the numbers for the cross-asset stock-to-flow model, 99.5%. That's like almost a perfect fit. That's amazing. I've never, ever seen that before. And if you look at the 95% of the time series stock-to-flow model, that's also very, very high. So it measures the amount of variance in the price, how much of that is explained by the amount of variance in the stock-to-flow. And in fact, it's not the most important measure. There are other measures, but it's a frequently used measure, so that's why I use it.
So you come up with this model, and this model explains using mathematics what the price of Bitcoin should be. And a lot of that has to do with the halving function. So could you please elaborate on what that is, and also give us an idea of the estimated price levels depending on the year that we're in?
The halving is a very important thing, because every 210,000 blocks, that's about 4 years, the subsidy that miners get when they mine a block is halved. From an investor's point of view, the supply is halved. That doubles the stock-to-flow measure and increases the value as well. So especially those stepwise nonlinear function is very, very interesting, because markets are anticipating on it. There's a lot of debate and narratives always around halvings. But if you look at the numbers, so we're now at a stock-to-flow of Bitcoin of 27, and that gives a value of, well, about a little under $10,000. So we're about there, a little bit over right now. But after the halving, if the stock-to-flow doubles, that's in May 2020. So that's 8 months away. Very interesting, very, very awesome event. The stock-to-flow doubles, but the value of Bitcoin goes 8 or 10x, somewhere between, let me give a rough range, somewhere between 50 and 100K, starting somewhere after May next year. 4 years later, there's another halving in 2024. The stock to flow will go to 100. something we as humans have never seen before. Spectacular moment in time. And the value that goes mathematically with an asset that has a stock to flow of 100 is somewhere between $400,000 and $1 million per Bitcoin.
According to stock to flow model hypothesis, Bitcoin price can reach somewhere between $50,000 and $100,000 after Bitcoin halving. And Bitcoin halving is just a few days away. Are you guys excited? I am. However, recently, Plan B came up with a new and very interesting and slightly modified stock to flow model, but with one major adjustment, removing time and adding other assets such as gold and silver to the model. He calls this model Bitcoin stock to flow cross asset model. First, let me explain the concept of the phase transition. It introduces a new way of thinking about the stock to flow. It explains why this model is important. Then I will describe how stock to flow cross asset model works. Phase transitions are an important concept of understanding stock to flow cross asset model. 3 examples of the phase transitions are number 1, water, number 2, US dollar, and number 3, Bitcoin. First, let's take a look at water. The classic example of the phase transitions is water. Water can exist in 3 different phases: solid, liquid, and gas. In the end, water is water, but in each phase it has totally different properties. Firstly, water can be solid, like ice cubes. Solid are characterized by structure and resistant to changes of shape or volume. Solid water does not flow to take on the shape of its container, nor it does not expand. Secondly, water can be liquid. Liquid form of water does not resist to changes. That's the form of water we drink. Well, duh, genius. Thirdly, water can be in the form of gas. A gas will fill a container, but if the container is not sealed, the gas will escape. When you go to the steam room and you open the door, you will know what I'm talking about. US dollar. Phase transitions are also present in finance. First, we had precious metals such as gold and silver. They considered to be hard money for thousands of years. Second phase was when paper US dollar was created. It was backed by gold. In 1934, 1 ounce of gold coin was redeemable on demand by $35, and this value was fixed as a one-to-one function. Third phase, when dollar was not backed by gold, but it was backed by nothing but paper itself. This note is a legal tender for all that, and we have totally different properties in those 3 phases. Bitcoin. The same is true for Bitcoin. Nick Carter and Hasu show in their 2018 study how Bitcoin narrative changes over time. If you look at the first 2 years when Bitcoin came into existence, between 2009 and 2011, Bitcoin was perceived as a peer-to-peer electronic cash, cheap payment network, and censorship-resistant asset. Between 2011 and 2013, it was still a cheap payment network, censorship-resistant asset, and not so much as an e-cash, but it was also more as an anonymous darknet currency. Since 2013, censorship-resistant asset expanded. Cheap money network and anonymous darknet currency contracted, and it also became more as a reserve currency for crypto, programmable database, and uncorrelated asset. So we can clearly see that time changes Bitcoin. These are 3 examples of phase transitions: water, US dollar, and Bitcoin. Those are very important concepts to understand Bitcoin and stock to flow model. It is important not only to think in terms of continuous time series, but also in the phases with those transitions. This is how Bitcoin cluster evolved. Each of those 4 identified BTC clusters have a very different stock to flow market volume combination that seems to be consistent with having and changing BTC narratives. BTC eCash, proof of concept. This is when stock to flow was at 1.3 and market cap was at around $1 million. BTC payment. Stock to flow was at 3.3 and market value was at 58 million bucks. BTC as a e-gold. Stock to flow was at 10.2 and market value was at $5.6 billion. BTC financial asset. Stock to flow was at 25 and market volume at over 100 billion bucks. And this is approximately where we at. This concept is pretty comprehensive. Now Plan B took a step further and added silver and gold stock to flow. Let's take a look at the next chart. Silver stock to flow is at 33.3 and market value is at 561 billion bucks. And gold stock to flow is at 60 and market value is at $10 trillion. Also, pay close attention to R-squared, also known as a coefficient of determination. It is a statistical measure of how close data are fitted into a regression line. The higher R-squared is, the better the fit and the more accurate prediction. The lower R-squared, on the other hand, would indicate less significant model. R-squared at 99% is highly significant value. We can interpret this that we are 99% confident that this price will continue to follow stock to flow model. The stock to flow cross asset model formula can be used to estimate the market value of the next Bitcoin cluster after Bitcoin halving. Bitcoin halving is just 6 days away, and after those 6 days, stock to flow will increase till 56. It would be slightly less than gold stock to flow. Stock to flow at 56 will last for 4 years, all the way until 2024. By using simply exponential prediction function, market volume equals e to the power 12 multiplied by 56 to the power 4 equals $5.5 trillion. If we take $5.5 trillion and divide that number by 19 million bitcoins, that equals to 288,000 per 1 BTC, which means we would expect $288 per BTC sometimes between May 2020 and 2024. BTC price forecast is significantly higher than 55,000 in original stock to flow model, so we will have to wait and see which model would be more accurate. Let me know what do you guys think about this new stock to flow cross asset model. Leave your thoughts in the comment section below, hit that like button and subscribe.